Oil and gas both have taken a dip here, coming off from the resistances we have seen. Oil is struggling to break or stay above 77.8. We have now seen it coming towards the support at 76.4. Natural gas has moved towards the next support at 3.45 and now trying to bounce back. So, what to expect today from oil and gas? Way to enter, way to exit, how to profit. We're gonna see with the help of charts and indicators. This is the first update for the day, and this is the only channel to give you two updates a day. The next one will be released before the US session. Thus, subscribe, press the bell icon, do like, share, and comment. Join the free Telegram channel for live updates, and join the channel memberships here on YouTube to support the effort. Let's start. First, we'll look into US crude, followed with net gas. Oil on the hourly charts, you can see clearly forming a support here at 76.5, 76.4, and finding the resistance from the 20 period moving average at 77, 77.4, 77 point. See, till 78 it has got very good resistances. Now see, this is the line it needs to break, means we have to now wait for it to stay above 77, and even if it stays above 77, 77.25, 77.6, and then 77.8 levels will come into picture as a greater resistance. While you know the support levels here are intact. The stochastic rising, the MACD is sharply bearish. It has to cross over for a buy. It may cross over as it has seen a good retracement. RSI almost flat. On the 2 hour, the observation is more or less same here on the 2 hour charts. The support levels here are very strong, and this we have discussed in our update yesterday as well. And I mentioned one more thing, that below 76.4 it is 76 level. It has to now trade below 76 in order to confirm bearishness. And thus today, if it stays below 76.4, you can say that now the bears are back. Now what is happening here? See, after finding the support, it is trying to bounce back, and the resistance levels towards 77.25 intact. Beyond this, you can expect little bullishness, and then you can also expect it to form double top. But this is the zone it needs to break. This is the red line it needs to break. This exists in my here in my charts for long now, and it has to break beyond this. The stochastic has dropped here. Look at the waves it is delivering. The MACD is also traded with divergence and bearishness looking downwards. The RSI almost flat. On the 3-hour see, on the 3-hour charts, another point to note here is drop, retracement, drop, retracement, drop, retracement. Now see, it has to break, because see, once it drops below 76.4, this is the first bearish candle, it can deliver a second one here. I'll wait for it to stay below 76.4, and then you can expect 76 and 75.8 as the next target, 75.5 as the second one. And only bearishness today in oil if you see it staying below 75.5, else it is still not to be treated bearish. The stochastic at bottom, MACD crossing over here, trading with divergence, staying bearish looking downwards. RSI staying flat. On the 4-hour chart, the observation is similar. Now notice, after the drop, it is consolidated enough here. It has taken the support from the 20 period, and it can give you a breakout on the upside as well. But remember, as long as 78 is not taken, you have to be cautious here, because beyond 78, we are looking forward to 78.4, 78.5, 79.2. And then beyond that, $80 level should be there very soon. The stochastic here is at bottom, the MACD crossing over at the top, trading with divergence, not a good sign for the bulls. Look at the waves it is delivering, first wave, second wave, and the third wave has just started, which means it is still not much of downside available, and hence you have to wait for it to break below 76.4 levels here. RSI has dropped, coming to daily. Now look at daily charts. See what has happened on the daily charts. It is showing a reversal sign after a good great rise, but you can see the bearishness here. It has to break now below this channel here. See, lower highs, lower lows are there. Either it has to trade above 78, or it has to now trade below 76, 75.5. Because see, this time if it takes a dip, it is going to be a stronger one. It can move towards the 20 period moving average and the median of the Bollinger Bands, which means a move towards 73, 74 zone. Yes, these are far beyond levels, but we have seen in the recent past, every rise is offset or followed with a little drop. And thus today's candle is going to be very important here for crude oil. Any breakout above 78 should be a very good indication anyways for the bulls here. The stochastic overbought, the MACD extremely divergent and bullish, the RSI overbought here. So considering this, now you know that the buying levels are above 77 here, but in fact if you are buying at 77, 77.25 the first target zone, 77.5, 77.6 the next, and then 78. These are the three levels which oil needs to break. If crude oil breaks these levels and any move beyond 78, just stay bullish. Close your eyes, stay bullish for 78.4, 78.5, 79.2, and $80 levels as the next targets. While it appears that it may try to retrace, and thus you can take a selling entry when you see oil trading below 76.4. Below 76.4, targets are towards 76, the first target level, and then 76, 75.8 rather, let me include, and then 75.5. These are the three levels it needs to break on the downside, because if it stays below 75, I think we are looking forward to a greater correction where the prices can move towards 74. So yes, below 75.5 we can see increasing bearishness here, chances for 75, 74.5, and in fact 74 levels exist here. Be mindful of this. And now before we proceed, if you want to learn this art of trading, join my mentorship batch. And if you just want to trade as per the signals, be a part of my signals channel on Telegram. Connect with me, write an email, ping me or Telegram for your queries. And if you're looking forward to a broker which offers you a free account with lowest spreads and no hidden charges, easier transactions and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. Now let's move to natural gas. See, net gas has seen already a dip towards 3.45, and after hitting the lows here, it has bounced back towards 3.7. What a good swingful day it was, and now 3.7 is the level which it needs to break in order to confirm the bullishness. Now, what is happening after the drop here? See, it has retraced, now forming a nice flag. It can potentially give you a breakout, but ideally the bullishness in net gas is only and only if it trades beyond 3.7 levels, else it is still not to be treated bullish here. Moving averages crossing over here, certainly signs of bearishness. If you look at the stochastic, this is at bottom. The MACD crossing over here is not a good sign for the bulls. It is trading with little divergence, but see, it is coming from slightly lower, and hence let's see how far it continues, else it can potentially reverse. RSI has dropped as well, right now trading flat. Coming to 2 hour chart, similar observation. See, it has formed a double top here at 3.7, and with that it is trying to retrace. I will definitely watch out how it behaves at 3.5, 3.45 zone. This should be a very, very good support zone, because below this we are looking forward to 3.4 and 3.36 levels as the next targets. Yes, if it continues to trade bearish and breaches the support levels here, we can look forward to a greater correction. Else, I'll be looking forward to see this rise or stronger. It is forming a nice flag, and if it breaks out, it is what I will be looking at. That is, and remember, any move beyond 3.7 now is a clear sign of reversal here. Stochastic has dropped here. The MACD is already trading bearish here, looking downwards. The RSI is also trading bearish here. Coming to 3 hour charts, see what has happened on the 3 hour charts. Couple of bullish candles and 4 candles it is taking for natural gas to erase the gains from this single candle. And thus this suggests that still there is inherent bullishness, but yes, it can give you a breakout any point of time from here. So if you see it is staying below 3.5, that is the point of time you can say now the bears are taking charge, and you can look forward to further drop, further correction here. Specifically below 3.45 is where we are looking forward to a greater correction. The moving averages here has started to converge but not yet crossed over. Also notice now 20 period moving average sitting at 3.6 should be a good entry for us to buy, but then 3.65 is the level it needs to break, and then 3.7. These are the two levels which natural gas need to break in order to confirm a complete reversal here. Stochastic looking down, the MACD trading with divergence, MACD is staying bearish. RSI is dropped as well. On the 4 hour charts, the observation is more or less same. See, couple of bullish candle, then a retracement here, and let it stay below 3.5, 3.45. That will be the confirmation of further dip. The moving averages are running parallel here. It's still a good sign for the bulls. The stochastic looking downwards. MACD also has crossed over, and it is trading with divergence and bearishness. See what has happened on the 4 hour charts, hitting the highs again, trying to reverse. Now let's see how far it can. Unless and until it crosses over on the upside, I will not treat this as bullish here. RSI looking downwards, slightly bearish sign it is. Coming to the daily charts now, notice what is happening on the daily charts. Did you see this? See 20 period moving average again proving out to be a support, and even if it stays below 20 period, you can expect the 50 period moving average to be the next support. That is right now at around 3.34, 3.36 zone, which should be an extremely important support for natural gas for the day and for the week, even if it tries to drop from here. Now notice what has happened. It has given a gap up, it has retraced, it has taken the support, and I expect that possibility exists that it can try to bounce back. But only reversal confirmation in natural gas is only and only if it trades above 3.7 levels, else I'll still be cautious here with the. But when you see the near term charts, see this is the beauty of net gas rise retracement. Every rise is offset with a retracement, and now it is still respecting the bullish channel. The highs are too far beyond 4.2, so the possibility of a reversal cannot be. If you look at the stochastic, this is slightly bearish. The MACD again trying to cross over for sell, but it has not yet crossed over. The RSI flat. So considering this, now I'll recommend you to only buy if you see it staying 3.6 levels. That is the only level beyond which I will recommend a buy. It is far, but you cannot avoid it. Beyond that, you can expect 3.6465 as the first, and if it breaks beyond 3.65, 3.68, 3.7 as the second. Any move beyond 3.7, stay bullish from. Beyond this, 3.8 and 3.9 levels will be seen, and beyond that, 4 can also be expected if it continues to rally from. On the downside, a selling entry is now at 3.5 levels. Expect 3.475, 3.45, and if these two levels are taken, then 3.4. Below 3.4, the most critical support zone for natural gas today is going to be towards 3.34, 3.36. I think this should not be taken at any point of time today, because below that, certainly you can say that the bears are going to take the charge. I still say that either possibly a range bound movement or modest bearishness is possible, and a recovery is what would be wonderful, because see, I am still having bullishness in tech for natural gas. So take your positions, take your trades accordingly. Like, share, subscribe, and comment. Join my mentorship batch, join my signals channel, reach out to me for your queries, join the free Telegram channel for live updates, and join the channel membership share on YouTube to support the effort. Thank you very much. Have a great profitable trading day.